Upbeat views on the economy, jobs, and the stock market have Americans saying that they will be spending more freely this holiday season. Steve Liesman joins us right now. He's got the latest from the CNBC All-American Survey. Hey, Steve.
Morning, Becky. We had a bit of a September swoon, and that's come back. People's attitudes on the U.S. economy have really come back strongly, and so that seems to affect their attitudes about how much they're going to spend. 20% now saying they'll spend more. That is a record in the 13 years that we've been doing this survey. It looks like a low number, but it's a pretty high number. And 51% say it's the same. That's actually a low number because they moved over into the spend more column. And just 27%, that's a pretty average number, saying they will spend less. Of course, we want to know how much they're going to spend. And I'm not sure what to do with these exact numbers because it is down. But notice the shift upwards from 2016. We've been above 900 now for 3 years in a row. That's $900 per person they're going to spend on gifts. Of course, we're interested in why are they spending. No big secret here. 51% say either their income or a family member's income is higher. I like this second answer. Some of them have bigger families. They got to spend more. 7% like the deals, but 6% say it's because of higher prices. The key question we've been asking and tracking for many years, and I'm really excited that Terry Lundgren is here to talk about this later, where are they shopping? The dominance of online remains, but it hasn't changed. The 43% say, what's your top choice? What's your top one or two choices? They say online, and then followed by big box. All of these first three categories have maintained their percentages over the past 3 years after the big change we registered 5 or 6 years ago. We'll get to that in a second. 14% say department stores and 12% say locally owned non-chain stores. Now, as to the online destination, there is no question. 35% say they go to the Amazon website. Everyone else, we ask for Walmart, we ask for Macy's. I'm sorry, Terry, I didn't mean that personally.
As a Fox company, I used to work there.
And everyone else is 3% or lower. Now, Terry, I'm confused by this data. I feel confident in it because we have a 3-year running track where this online destination has ratcheted up to 40 to 45%, but it hasn't grown anymore.
Yeah.
So either the big box guys and the department stores are doing a good job. There's the teletape that I created. This is just for the discussion with Terry.
Yep.
Watch what happens 2013 to 14. That's the year that online overtakes big box stores. And then I shifted ahead just to keep it tight. 17 and 18 and 19, they're the same. 40%. Terry, what's going on? Is online not growing? Is our data wrong? I'm open to any suggestion.
No, well, start with the base, and the base is that 90% of all purchases, I think 89.5% by third quarter of this year, are still purchased in a physical store. Now different categories change. So apparel, it's 80%, and 20% is being done online, right? So you start with that base that there's still a ton of business being done in the physical store environment. Secondly, we're developed in online purchasing. When you've got a lot of these companies have been 25% of their business is now online. A lot of these department stores. So it's already developed. Harder to grow on a well-developed business. I commented earlier, Steve, before you got here, that I like companies like Walmart and Target who are actually underdeveloped in their online sales, but aggressively funding that growth, and those businesses are growing.
We haven't really talked enough about FedEx and the shipping component of this, really?
Yeah.
With Amazon doing what it's doing in terms of building out true logistics and infrastructure, can the others ever really catch up, and will the pricing become a problem for them?
Well, I think the answer is these are sophisticated, experienced companies that already have a track record on shipping and delivering, but the game's changed. Because it used to be, I think FedEx was, I can get to you in 3 days. That's awesome. Well, that's no longer acceptable. And Target is pushing hard for same-day delivery from their stores now, even for these last few days. Walmart doing much of the same. That's who they're going to compete with. The answer is, I think it's going to be like department stores. I think it's going to be like retails in general. There's going to be more and more competition. Prices are going to be lower. Consumers are going to benefit, but not everybody's going to, win, economically with these models.
Andrew, I want to ask you a question because you cover tech so closely. Isn't the whole tech space priced for never-ending growth in market share? Is the tech world priced for the idea that 45% who say online's my top choice is going to go to 55%? Is the market price for the idea that the department stores and the big box stores have somehow found a way to hold their own in this competition?
I don't know about that. I think that there's a sense that the pie will grow materially, and that ultimately the guys in the bricks and mortar will lose, right? I mean,
well, except for that Amazon's doubling down, buying bricks and mortar by going into Whole Foods.
Yeah, Amazon realized just what I just said.
But I feel like
they're only getting a small percent of the opportunity, right. So they want to get into the bricks and mortar business, and that's an upside opportunity.
A much more efficient way to do it, right? That's the argument, right?
Well, if you're starting today and you can build in a greenfield,
yes.
A new model, so the answer is that would be.
If we're all sitting together
awesome.
in a decade from now, and let's hope we are, but let's say we're sitting here a decade from now.
By the grace of God.
By the grace of God, what do you think Amazon will look like in terms of the bricks and mortar piece?
Oh, I think they'll be a significant player in bricks and mortar, and they'll be in multiple categories besides food, which is their primary, play so far. I think they will definitely they could actually buy someone. It'd be easier for them, but I think they've resisted that because of my point earlier that they'd like to start from scratch and have their own new model, and ideally that would be built from scratch as opposed to
when Becky and I sat across from each other in the 90s in the Wall Street Journal, and she covered retail and I covered the economy. Retail was one of the sleepiest, least interesting businesses that was out there. It is now. Love it.
And by the way, it was when everything was happening.
It is now one of the most dynamic, technologically interesting, and changing businesses that's out there.
And keep in mind, back then, they thought Walmart and Target were dead. Best Buy, they were dead. Remember those stories?
Right.
Look what's happened now.
The best part about the story you just said is that you guys could have said to each other, if we were talking, if we were sitting around the table a decade from now, and look, 2 decades later.
2 decades later.
We've argued about Christmas every year since.
Right.
We have,
Isn't that
about what
great?
the outcome's going to be.